morning, everybody. Welcome on into a brand new week and your first episode of FreightWaves Now. I'm Kaylee Nix here with Anthony Smith.
And on this Monday morning, we'll get you started with Mike Baudendistel coming up in a few moments, talking about retailers and grocers pushing back on CPG pricing. We'll also have a preview of our SiriusXM radio show with Grace Sharkey and what's coming up this week. But first, our top story again takes us to Texas, where another company is setting up shop to take advantage of the reshoring movement. Borderlands writer Noy Mahoney is here to join us and talk about it. Noy, thanks so much for being here this morning.
Thank you for having me.
So let's get right into it. Excel Logistics headed down to Laredo, just one of the very many companies setting up shop right there along the Texas border. Talk to us a little bit about it.
Yes, Excel Logistics Services and its parent company, Big Logistics, are making big moves along the border, no pun intended. Excel recently opened its second warehouse in Laredo, Texas, because of what they say is increased demand for capacity along the border because of all the freight flowing in between Mexico and the United States. The newest warehouse, they told me, is about 77,000 square feet. They also have another location. Their first location in Laredo is 55,000 square feet. So they say both of these facilities are, at capacity or expected to be at capacity in the first quarter. And they already told me that they are looking into building or constructing a third location, Excel's third location in Laredo. So they're really making big moves there down in South Texas.
And Noy, we're looking at Excel. Do they have a Texas presence at all, or is this going to be their first footprint really in the area?
This is really interesting. Excel was recently acquired by a company called Big Logistics. Big Logistics has major warehouse locations in Fort Worth, Dallas, and El Paso. So now, this combined company has a really strong presence, in all the major ports in Texas. And they're also looking at building a facility in Santa Teresa, New Mexico, which is near El Paso. So they're really putting a lot of focus on the U.S.-Mexico border at this time.
So last week, Zach Strickland, our head of market intelligence, spoke a lot about how there's this massive shift from California to Texas for a lot of companies and for a lot of carriers. You're seeing this kind of change over. And obviously, that has to do a lot with the nearshoring and reshoring initiatives. Can you talk a little bit about that and how it relates?
Yeah, that's specifically one of the reasons the Excel Logistics officials told me that nearshoring, it's not around the corner. What they specifically told me is nearshoring is here. It's happening right now. And this is one of the main reasons for their major push for, opening these new facilities along the border. And they only see, the demand for warehouse space and for freight service getting stronger in the coming years. So, not just Texas. They say New Mexico they see is growing. Other places along the U.S.-Mexico border, California, Arizona. So they see it being strong along the whole 2,000 miles that we share with Mexico.
And Noy, this has definitely seemed like something that was not just going to be, like you said, happening just as a blip, but definitely seems like a trend that we're going to see and be really expecting in the industry moving forward. Are there any other expectations of other types of companies that will be doing some nearshoring work as we look at this area, thinking about, of course, the automotive industry, consumer products, things like that?
Yeah, they told me Excel is one of their big focuses is automotive, which is, the focus of a lot of 3PLs servicing, U.S.-Mexico. But they did say they see increased demand for consumer goods, electronics, TVs, home appliances, aerospace parts, parts for airplanes. So there's many different verticals that they said they see an opportunity to really grab a hold of between U.S.-Mexico trade.
So last week, Noy, we had Mary O'Connell, our 3PL expert, on, talking a little bit about how Customs and Border Protection rules are changing for brokers to where now, instead of having to get a state-by-state licensure, they can get a single licensure that covers all of their activities in multiple states. Can you touch a little bit about the value of this change in rules, especially when it comes to companies now seeing reshoring opportunities, not just in California or just in Texas, but the opportunities along the entire Mexico border and the 4 states that we share?
Yeah, really. I haven't seen Mary's interview, but it really sounds like just another tool for 3PLs to really offer anybody wanting to get freight back and forth across the border. That gives them another thing to say to customers. I have this license. You don't need to have somebody from each state. I can cover the entire border for you. That's really what that sounds like to me.
And kind of sticking on some of that automotive path, can you tell us about what announcement was made on Friday around BMW?
Yeah, BMW came out with this huge announcement late Friday afternoon. I just happened to see it when I was finishing up my column, and they announced that they're investing $800 million in their existing plant in the Mexican city of San Luis Potosi. And it's specifically for a new line of electric cars. And they haven't said what type of car it's going to be, whether it's a SUV or a sedan, but they did say it's going to be a new line of electric vehicles. It's going to bring, I believe they said, about 700 new jobs. And it's just a really big deal. Another feather in the cap for Mexico, which has been the country has been pushing really hard to sort of make itself a place for, electric vehicle production.
And so, Noy, what does this say about BMW and their hopes to kind of move to Mexico if they're German engineering and then you've got them in Mexico now?
Well, like I said a second ago, Mexico is really pushing really hard to say, hey, we're a place for electrification. One of the reasons is lower labor cost and, the proximity to the United States. And Mexico has been changing their image of, just cheap labor. They also want to say, hey, we have really highly skilled labor down here that can produce, any kind of vehicle, whether it's electric or, gas powered vehicles. So it's really just like I said, a feather in the cap for the country. And hopefully we'll see more of this types of electrification factories and new lines of cars coming south of the border.
And Noy, would it be another advantage for Mexico to have the opportunity to really build out a lot of infrastructure instead of really trying to really kind of retroactively update outdated, warehouses and things like that?
Yeah, that's a great point. For the past few years, we were seeing more, Ford builds this Mustang Mach-E electric vehicle in Mexico. And as you said, it gives these companies like Ford and General Motors and BMW a chance to retrofit existing factories, which will probably saves them a lot of money instead of building these, giant new factories to build electric vehicles. But it also helps improve the existing infrastructure in these cities where these factories are, because they need, better power lines, better roads. So it's just a sort of a good deal for the places where these factories are located and the country itself.
And a couple of other company announcements as well wrapped up in Borderlands for this week. Who else is looking at making pretty significant investments down there?
Yeah, another German company called, I hope I pronounced this right, Baudendistel Incorporated. They build electric sensors for different types of industries, for the automotive industry, other types of industries. But they made a major announcement as well. I think they're building a $55 million factory in the Mexican city of Aguascalientes, which is in central Mexico. And they said this factory is going to be for their customers in North America. So it's just another foreign factory, or foreign company, opening a factory in Mexico or building a new factory in Mexico.
And Noy, the list goes on. Can you also tell us about Charismatic Brands?
Charismatic Brands, another big announcement out of Texas that seems to come every week. This is one of the biggest uniform and school clothing manufacturers in the United States. And they announced that they're putting a major shipping hub in Dallas, Texas, near the DFW airport. And they say this hub is going to be a consolidation of several existing facilities around the U.S. It's going to serve as their sort of global sourcing space for, I suppose, for North America and for maybe even other countries. But it's just another sign, I guess, that as you spoke about earlier, that Texas is sort of more resilient, or has been, compared to other places like California in terms of freight flows.
Absolutely, Noah. Well, thank you for keeping a wrap on all of this. If folks want to read Borderlands, where can they go to do that?
It's on FreightWaves.com every Sunday, 7 a.m.
Awesome, Noah. Well, thanks so much for being here this morning, and I'm sure we'll check in with you again throughout the week.
Thank you so much.
All right, we're going to head on over to the Walt for our first look at our first carrier update.
We'll be joined by Donnie. Donnie, get us started here. Looking at the diesel market, seeing some positive signs on the retail front. Obviously, the decline's relatively slow, but it's a decline nonetheless.
Yeah, so we're almost back even with this, where we were before this second interruption.
Yep.
As diesel fuel continues to decline. We had it where our ultra-low sulfur diesel rack prices kind of went back up a little bit, forcing up the retail price at the pumps. We saw our gap narrow down to about $1.10. As soon as it got into that range, of course, retail suppliers started to push their prices up at the pump.
Yep.
And then we started to drop back down again. So here we're at 467 right now. Need to be at about 315.
Yeah.
But, you know, this is one of the biggest reasons rejection rates are so low.
Yeah.
Carriers are, because of such high fuel prices, carriers are having to drop in and haul their contracted freight just because they need that fuel surcharge. Basically right now, it's real close between contracted rates and our spot rates, except the fact that contracted rates have a fuel surcharge that can add almost 70 cents per mile to their loads, where
spot rates are all in.
All in.
Yeah.
So that's why this is really important to keep an eye on. If we can see this drop about another $1.50 over the next few months, then it could keep the pressure off of the acceptance of contracted freight, which then now we got to watch what's going on in the spot market rate to see how that would affect. But right now, like I say, this is one of two pressures that are pushing rejection rates down. Now, if we go to the next chart here and look at the spread, this is the spread between the cost at the pump and the wholesale fuel price minus all the taxes, basically. So the bare wholesale price. And right now, we notice that, when that gap gets around $1.10, $1.10, they start pushing their rates back up. Well, right now it's been climbing, and we're up to $1.64. So we're in a pretty good safe zone to say that fuel's not going to be pushing back up here anytime soon. But if it does, it's because we'll see this dropping back down, and down this, I see right here's where it started to push back up, and we drop down between that $1 and $1.10 mark.
Yeah, I mean, even if you look back over here, January 14th through the 19th, when we were at that $1.30 cents range, they didn't necessarily push rates up, but they didn't go down as fast as they were going back when we were at $1.50, $1.40.
Yeah, hopefully this will help accelerate the drop. We've been dropping 1-2 cents a day over a little while, and we'll say it'd be very helpful, and not just to truck drivers, but to any American that owns a car and drives a car, for fuel prices to drop down, especially during the first quarter when things are already very tight. Fuel being one of the top two biggest expenses of a trucking company. We need those prices to come down. Money's already tight. They can't push rates up. This could accelerate some of those smaller companies going out of business.
And if you want to see the impacts, go look at some of the earnings releases from the larger carriers, those publicly traded ones. You can see how fuel plays an impact on the expenses side, but then they break out their fuel surcharge revenue, and you can see where fuel contract, how it can kind of offset some of those rises.
Sure. We come back to an with the NTI, and then we'll dive into some data on some reefer.
Awesome stuff. Thank you, Donnie. As always, right now we'll hand it back over to Kaylee Nix.
Thanks, guys, for that first carrier update. It's time now for a first check of your top stories on FreightWaves.com this morning. Downtime for maintenance and a pullback in flight scheduling at Amazon resulted in a marginal drop in cargo revenue for hybrid carrier Sun Country Airlines. The carrier provides transport for Amazon. It said cargo revenue increased just 4.6% during the fourth quarter, but dipped 1.2% for the full year of 2022. There was a 4% decrease in hours utilized during the full year as well. Overall, the airline reported fourth quarter revenue of $272 million, a 31.6% increase year over year, and adjusted pre-tax income of $10.3 million. FedEx Freight has enacted another round of temporary driver furloughs in some United States markets, but did not release the number of furloughed drivers or say how long they can expect to be out of work. Some employees were offered permanent transfer opportunities to markets that have hiring needs, according to a statement from the company. Drivers will retain health benefits and other financial incentives during the time of their furlough, and FedEx said that it will bring back drivers as business circumstances allow. And LTL carrier Saia delivered a mixed bag of earnings with a higher yield for fourth quarter 2022, but with a weaker operating ratio and lower tonnage. Tonnage dropped 7.65% for the quarter and shipments dropped 8.16%. However, yield improved to $20.11 net of fuel for the quarter, up 6.4% year over year. Operating ratio hit 85.9%, up from 84.2% last year, and analysts use this number to question whether or not the company can hit their goals of an operating ratio in the 70s. And for those headlines and more, you can head on over to FreightWaves.com. If you're watching us on YouTube, don't forget to like and subscribe. And head on over to tv.freightwaves.com or download our FreightWaves app if you want to find even more content. We're going to take a quick break. We'll be right back with our first weather update of the day, so don't go away. The 2023 Freight Tech 25 list is filled with meaningful innovators from across the industry who are helping shape what the future of supply chain will look like. Check out the full list of these companies and all the latest Freight Tech news at FreightWaves.com.
Welcome to Drilling Deep. I'm your host, John Kingston. Drilling Deep is the place where we talk about oil and we talk about diesel, and you have to drill to get oil and you have to get oil to make diesel, so that's why we call it Drilling Deep. Drilling Deep drops every Friday on FreightWaves TV and all available podcast platforms.
And welcome back to FreightWaves Now. It's time for our first check of the weather on your Monday morning. We're setting up for a much quieter week across the United States, especially when you look at last week. The ice storm that caused so much havoc last week across Texas and Oklahoma has cleared on out. Warmer temperatures over the weekend has let the deep south finally find a thaw, and we're looking at a pretty nice week on the way, at least for the first half of the week for the majority of the country. Let's check it out in Sonar Critical Events right now. We've got that satellite presentation up right now now. And as you can see, the southeast, really everywhere from the Missouri Valley up through the lower parts of Illinois, Indiana, and then even into the eastern half of the United States. Pretty clear, expecting bluebird day all the way from Texas up through the deep south, here Tennessee and Freight Alley, up to Kentucky, the Virginias, and out towards the Atlantic coast. Cold front over the weekend has pushed out all of that cloud cover and gotten rid of that huge storm that brought impacts across Texas and Oklahoma, leaving behind it warmer temperatures, sunny skies, and a nice little break in that active weather pattern for the states across the southeast. Further up towards the north, we're also seeing a little break in activity across the Great Lakes region, so Wisconsin, Michigan, and then up across Ohio, Pennsylvania, getting a little bit of sunshine break as well. You can actually see all the snow on the ground across and around the Great Lakes up through the western edge of Lake Michigan. They got a pretty decent amount of snowfall last week, and you can see that on the satellite. But other than that, looking at pretty clear skies and much warmer temperatures, at least for the deep south. Temperatures today across Texas and then up into the Mississippi Valley, up into Alabama and Georgia, looking at settling in the mid to upper 60s, possibly some 70s and 80s along the coastline as well, the Gulf Coast. So feeling pretty good to start off your week. This is going to hang on at least through Tuesday into Wednesday for the majority of the southeast as well, before we get a little more deterioration and bring some more heavy rainfall back in, starting with the southern plains. We'll talk about that coming up a little bit later on in the show in our next check of weather. Right now, though, we're going to head back over to Isaiah Buchanan. He's got our first look at the social roundabout this morning.
And yes, that would be another day that I don't have my mic on to start my hit. Welcome into Social Roundabout, everyone. My name's Isaiah Buchanan, and we already know that Beyonce is Queen Bee, but now she's also Queen of the Grammys. Last night, she won 4 more Grammys to add to her total of 32 Grammy wins, which is now the most by any artist in history. So congratulations to Beyonce for that. There was other big nights, included Harry Styles. He won Album of the Year for his album Harry's House. Lizzo won Record of the Year, and then Bonnie Raitt won Song of the Year for Just Like That. So congratulations to all the Grammy winners. There were several of them for, they have all kinds of categories for albums, songs, and for every different genre as well. So congratulations to everyone that won last night. Switching things up a little bit, also over the weekend, the spy balloon from China was shot down. This is video of that I found on Twitter, and it shows, I'm not exactly sure if it's a missile or what they shot at the balloon, but China did say over the weekend that they are urging the U.S. to remain calm. They supposedly said that the balloon was an accident, that they lost control of its flight path. The China's Ministry of Foreign Affairs wouldn't give comment when asked what kind of company made the balloon. She did say the flight path was an accident, that China has lost control of similar vehicles like this before. She is now calling for mutual respect and a peaceful coexistence between the U.S. and China. Now, wrapping things up, I know there's a question that you've always wanted answered for the past, 25 years or so that you have wanted answered. And yes, Jack could have survived on that door with Rose at the end of Titanic. James Cameron, the director of Titanic, came out and admitted that Jack could have survived on that door with Rose. He did say there were certain variables that had to be looked at for this, but if they were both able to get on the door with their upper bodies up out of the water, just their lower extremity in the water, then both of them could have survived until a lifeboat would get there to save them. So there it is, folks, the answer you've always been waiting for. That's all I have for this edition of the Social Roundabout. Right now, I'm going to toss things back over to Kaylee and Anthony.
All right, Isaiah, thank you for that social roundabout update. We'll talk to him a little bit later on in the show. Right now, we're going to welcome in our next live guest. We've got Alan Adler joining us. We found out he survived manifest last week, and today we're talking about a decline in new trailer orders, or new Class 8 orders, that is. Alan, thanks for being here with us.
Good morning. Better rested, maybe more cogent. I don't know. You'll have to judge that.
So new trailer, I can't remember what we're talking about.
Well, yeah, okay, so let's talk about Class 8 truck orders. Interesting that, what we're starting to get now is this idea of don't look at every month. We do it anyway because the numbers come in, but don't draw trends from monthly numbers. And the latest example of that would be January. Between 18,000 and 21,000 new truck orders in January, well below what we saw over the last few months have been declining a bit since September. There was a blowout month in September of like 55,000 orders, which is, I think might have been the highest on record since like 1996. So it makes sense that they would start to go down a little bit after that. And they are, but the OEMs that we've had an opportunity to either talk to or listen to on their earnings calls, the public companies anyway, are saying, look, it's going to be a good 2023. We've got a lot of pent up demand. PACCAR points out that really 3 years of pent up demand where they couldn't build as many trucks as customers wanted. So even if you see further signs of economic slowdown, and after last week's employment numbers, who knows what's going to happen? You've got to look at trucks a little bit in a separate category, simply because they've had so many supply issues over the months and really years now, that the fleets and others want new trucks and they want them now. So there's plenty of momentum to keep building.
And of course, one of the things that you also reiterate in your article around this 1 month not being indicative of a trend, but also the year-over-year numbers, it's up 2%. Is that right?
Yeah, the 2% figure, we kind of look at it, actually, FTR looks at a rolling 12 months. I think it's 303,000, which is a pretty good build. You won't manufacture probably quite that many, but a lot of the projections, Anthony, are in that 270 to 310,000 range for 2023. The one thing, interestingly, that we're not going to get a big bounce out of, we've talked on this show and others about a pull ahead. There will be some pull ahead ordering this year, but mostly in California, where emission regulations go into effect, new regulations go into effect next January. So you'll have some pull ahead that will affect that state, but by and large, we should not look for a big pull ahead order this year. But that pent-up demand probably will fill in those months where, people might slow down or might, situationally look at something in the economy. But again, I don't know if the number is still 80,000 to 100,000. That's what we've been using for a while. But there is a definite backup out there of people that want more trucks. This is not added capacity. This is mostly replacement demand. And again, a lot of the trucks that are out there have been running much longer, 6-8 months longer than the fleets like to keep them in service, because the longer you keep something in service, the more it costs to maintain it. And these are costs that the fleets typically, pencil into the second owner, so their warranty will hold for a certain period of time. And then it becomes somebody else's problem to, get some of the maintenance done. So they're absorbing maintenance costs much more expensive than perhaps, flipping and getting into newer trucks more quickly.
So talking about actually taking deliveries of these trucks, do you have any numbers on how many were delivered last year from full year orders, and then what that looks like delivery coming out for 2023? Are we still expecting really long delivery times because of supply chain issues, or have most of those been kind of worked out?
Well, for the most part, Kaylee, the supply chain issues have been worked out. Doesn't mean they won't come back, and that's why you see ranges in some of these estimates for production. For example, I think PACCAR put a range of 49,000 to 53,000 on the number for the first quarter in terms of their build, because you can still get some things, but by and large they seem to be behind most of the companies. Now, Volvo had a little bit more problems getting their order books opened in the third and fourth quarter last year, so you'll probably see a bit more of a surge for them this year, whereas the others were able to fill in a little more quickly. I do think, though, that from a deliveries perspective, I think the estimate, like I just mentioned, is somewhere north of 270,000. It depends, again, how you count, because some companies count just the U.S. and Canada. Others include Mexico. So it's a bit blurry there. But all in all, it should be a pretty strong year from all we're hearing. That's the expectation at this point. We see Cummins earnings this morning. They're also projecting a strong year for their businesses. And of course, that's where a lot of the engines come from. Everybody buys engines from Cummins. The only area that they're still sort of having kind of a difficult time with in terms of EBITDA is that kind of a startup business, which is their new power segment. But they are really looking for strong numbers across the board in 2023, coming off of, several records that were set for 2022.
One of the companies you just mentioned there, Alan, Volvo, how do they look compared to PACCAR and Daimler?
Well, I think they're going to be fine, Anthony. They are not as big a player in North America as the other ones are. Daimler is 37% of the share. PACCAR, when you count Kenworth and Peterbilt, you're looking at about 30%, give or take. So that's the bulk of it. Volvo in North America, which would include Volvo trucks and Mack trucks, is more like 13% here, but globally, much stronger. In fact, I think they have a release out today. I haven't read it yet, but they're saying they had market share gains in 41 markets last year, which is impressive. And they did post good numbers for the fourth quarter. I think that the caution that we took from it was that they'd had some order issues. They said, hey, don't make too big a deal of it. We're just probably trailing a little bit, some of the other companies. But it's interesting that they are, sort of pointing to all these market share gains for 2022. So I think the Volvo business is in really good shape. It's just that we have a little bit of a different view here because they're not as big a player in this market.
Alan, do you have any insight right now on some of the used truck market and used truck prices, and maybe some of those people who invested in a truck in 2020, 2021 during this initial start of the boom, and now with the bus cycle in 2022, they found that they've had to sell? Are there any numbers on that coming visible yet for 2022?
Well, we just, we tend to see used truck numbers more middle of the month, and we did just, have a report within the last week to 10 days. And the reporting there suggests that, we're getting closer to the normalization, if you will, of used truck prices. They're about 20% higher right now than they were before the pandemic. But, a year ago, they were 150% higher. And that was when, unfortunately, people who jumped in to take advantage of, $4.50 a mile spot rates said, oh boy, I can make a bunch of money. I'll reactivate my authority and I'll jump in. Unfortunately, everything flipped pretty much right after they did that. So they're either getting rid of the trucks that they purchased, and I'm speaking mostly of owner operators at this point. They're either getting rid of them and joining a for-hire carrier, or they're leaving the business altogether. So you do have a shakeout. Others on our staff, of course, have reported some of that. But I think from an equipment standpoint, you're going to have plenty of used trucks at sort of improving prices. When I say improving, I mean lower prices coming in the first half this year. And then probably by the middle of the year, we should be back to sort of that pre-pandemic pricing. And for example, $70,000 for a 3-year-old truck would probably be about right compared to, say, $140,000, a year ago.
Definitely sounds like a solid forecast, Alan. Are there any underlying variables that could potentially throw this off that you'll be watching closely?
Well, I think if, the R word, the recession word gets a lot of attention. We're either in one or we're not. We're going to enter one or we're not. We're going to have a soft landing. I mean, this is your area, Anthony. I'd throw it right back at you as the economist. But I feel like right now these guys are, looking to keep the plants running. They're not having a real hard time getting workers. I think John Kingston reported last week that there was a lot of hiring in the trucking space, and that doesn't all reflect, of course, on the OEMs, but they seem to have what they need in terms of ability to build. Kaylee, you mentioned early on, you didn't mean to, I don't think, but you mentioned trailers. Trailers are also strong right now. And I think that all of the equipment space is a pretty good place right now. And again, all of the used stuff falls, that trails what happens with new builds. And we are getting a good run of new build right now, and therefore that's going to release a lot of the, they might have at one time been newer used. Now they're not quite as new used cabs and trucks and trailers into the market, but they are coming. And so that, of course, will drive prices lower because we'll have more availability and the ability to pick up decent equipment, if not, really cherry equipment.
All right, Alan, we're going to watch that for sure. Thank you so much for joining us today. We can catch Truck Tech later on this week. Have a great rest of your day.
Thank you. You too. Bye.
All right, now we're going to take a short break, but we'll be right back with more FreightWaves Now.
When guests come to an event like F3, we know what they want is a chance to show off their products, their swag, and make new partnerships that will last until our next FreightWaves event.
But the problem is there are so many industry events, it can be so hard to find the right one to invest your time and energy in. We at FreightWaves take your investment seriously.
Which is why we brought together thousands of industry professionals in one city over 3 days to showcase all you have to offer.
Because your successful connections at an event like F3 move all of us forward.
Don't believe us?
Join us in June.
Hey everybody, this is Thomas Watson, enterprise trucking carrier expert here at FreightWaves, telling you about my show, Loaded and Rolling. Now, it involves trucking topics for large carriers and even small ones that wish to be large. Anything that impacts trucking, you can get it there. You can catch us every Tuesday at 1 p.m. Eastern on tv.freightwaves.com. We do it live.
Welcome back to FreightWaves Now. On this carrier update, Donna, you get to start here looking at the NTI and compared it to what we're seeing in the contract market. I mean, we've seen it move down to 249 of the NTI.
Yeah, we saw a little bit of a bump, Tony. So last week, think about what happened last week. Texas froze over. There was a big winter storm that went from parts of Mexico all the way up through the Northeast.
Yep.
And of course that cut off a little bit of I-10, I-20, I-40, I-75, I-95, I-24 and I-55 going. Well, 24 goes east to west, but it kind of goes up.
Yep.
To 55. So a lot of that traffic was cut off. We saw this happen a couple of years ago. And of course, at the time, capacity was tighter and spot market rates shot up.
Yep.
Well, we saw a little bit of a bump.
Yeah.
It was a bump. It went up about 10 to 12 cents per mile over the weekend for like a day. And that kind of shows you how much of a grip shippers actually have on this. You would have thought it would have started to react a little bit earlier, but since it is the control of spot rates are, as you had in your PPI, over on the shipper side, there was some reaction, yes, which was good, but it was very short-lived and it dropped back very fast. And we dropped down to 249. Now, this is a 7-day rolling average. You'll see this better if you look up the NTID.USA, which you see the daily.
Yep.
So, but it was short-lived, but at least they were able to get it to react a little bit.
Yeah, and you don't see it in the 7-day average because it was so short-lived, right? I mean, you're talking, what, 1 day of that increase?
It was one glorious Friday.
And it's still I guess it's still included in this, but we're still seeing the NTI as a whole move lower, even with that increase. So
yeah, it was 1 day, it went up and then back down to the same. We're actually a little bit below. Now, contract rate, we saw contract rates for reefer start building back up, but we've hit our peak here and we started to see it drop back down. I was curious to see if this could be the point where our dry van, and we'll look at this tomorrow, our dry van was moving down and this was moving up and they came within about 8 cents of each other and they're holding at that right now. Yep. And I was hoping this might be where, I drew the chart back last week and showed you where before COVID, reefer was higher than dry van. And I would suspect sometime after COVID is over that it'll naturally move back to reefer being more higher than dry van. Well, right now that gap has been closed and it's 8 cents. When will it cross? Will it be February?
Yeah.
Will it be March? How long is this going to take? It's just 8 cents. And then, of course, it should go up about 10, 15, 20 cents higher than dry van. But we'll see. But that's when I would call that we're back to more of a normal market when you see those contract rates get set back in place.
Yep.
And everything seemed to go back to normal.
Yep.
All right, let's look at our next chart here. This is reefer outbound tender rejection volume. Outbound tender volumes and outbound tender rejection rates. Volumes are kind of holding kind of steady, up, down, slightly going down, but kind of steady over here since the beginning of February here at 1,423 currently. Rejection rates, move down, they bump back up just a hair. Little winter storm there, and they're still pretty steady, but they're very, very low. Record loads that we've seen over years are at 5.05%, or near record lows.
Yeah.
So we'll keep an eye on this. We'll look at some of the changes that are coming up. We'll look at outbound tender lead times when we come back next time, Tony.
Awesome stuff. Thank you, Donnie, as always. Right now, we'll hand it back over to Kaylee and Anthony.
All right, guys, thank you for that. We're going to welcome in our next live guest for Community Spotlight for your Monday. We've got Mike Baudendistel, host and writer of the Stockout Show and newsletter, our CPG expert, and then also our head of intermodal solutions. Mike, thanks for being here. We're going to talk a little bit about CPG companies, the fight for grocery store prices, something I feel like everybody is feeling. Like I'm constantly fighting with my wallet when I walk into the grocery store.
Yeah, I think it's something that everyone can relate to. And I think the other thing that everyone can relate to is hearing someone come out of a grocery store or went to a grocery store recently and being very upset at that grocery store. This is a bad grocery store. Kroger's charging too much. Well, Kroger's on your side. They want those prices to be lower too. It's the CPG companies that are keeping those prices high and really being kind of the problem here. So it's the contentious relationship between the retailers and the CPG companies has sort of gotten worse. And sort of in the last week, it's really sort of become the topic of the hour. There's this big Wall Street Journal report about Whole Foods conducting a virtual summit, asking its suppliers for price cuts. I made it the subject of my CPG newsletter. The Washington Post really had a really good article about this that I read last night. And then some of the CPG companies that have reported have the analysts have asked them about this, and some of the CPG companies were saying, well, my prices aren't going down. Like Mondelez, maker of Oreos, Cliff Bar, among other things, they said their costs are going to rise double digits again in 2023 from 2022. So every CPG has a different mix of ingredients, and really the retailers and CPG companies are not on the same page here, but I think it's getting to be something that the retailers are more concerned about, because I think it's clear sort of the traditional grocers are losing market share to the likes of the real big box guys, Walmart/Sam's, Costco in grocery, as well as some of the private label heavy companies would include Aldi and Trader Joe's in that, even though they have different demographics. And then even some of these dollar stores like Dollar General adding space for grocery, doing well in sort of the more rural markets that they serve heavily. And so I think the retailers are concerned that a lot of these habits that people have picked up with these high grocery prices are going to stick. And, there's going to be less share for Kroger, Whole Foods, some of those more traditional grocers. If you want to sort of put this in context, the last couple of years, really the CPG companies have been fighting higher costs for, really, it's been intense the last 2 years. But in the course of a cycle, when their costs are rising, normally their margins would shrink because just their costs move quicker than the retail prices. Now that some commodities have crested, coming back down, you would think that would give them a little bit of leeway in terms of seeing those margins expand a little bit. But a lot of the CPG companies have been concerned that the retailers wouldn't allow that. And as soon as the commodity prices started to come down, retailers would just say, no more price increases. They're going to be cut. So like some of these companies like Nestle really had big price increases relatively early. Smucker did something similar. I think some of the smaller CPG companies are going to be in a more difficult spot, which is part of why maybe Whole Foods was the one pushing for it. They have a lot of smaller suppliers. They don't really deal as much with the General Mills of the world. So, interesting, time. I do think that the prices for most of the traditional CPGs are going to be stickier than most people would like. Usually it's those, the foods that are not branded. They're a little bit more of a pass through where those prices could come down, where something that has sort of a real, sort of strong brand associated with it. Consumers get upset every time those prices increase. So it's easier just to keep them at this high level and maybe don't increase it as much, in the future.
So, Mike, I know that we've talked a lot about retailers deciding to cut SKUs and kind of reduce their product offering as a way to cut some of these higher costs. Do you think that we run the risk of companies like Kroger and Whole Foods going, okay, you know what, if you're not going to bring down these prices, we're just going to get you out of our inventory and we're just going to say forget about it, move towards more of that private label offering and get consumers to kind of transition, maybe lose their brand loyalty in order to save a buck or two?
Yeah, I mean, there's a lot of games that the retailers could play. I mean, they can do things like have better positioning for their private label brands, or if the CPG companies won't let them offer the 2-for-1 or 3-for-2 that they usually would have, they could cut the price aggressively on the private label, get people to use those, and sort of to switch over those habits. So there's been some on the retail side cutting, SKUs, but really a lot of that has come from the CPG companies as well, where a lot of CPG companies have cut their SKUs, just focusing in on the ones that drive more sales, that are higher velocity, type products. But really sort of think the retailers may be in the more advantageous position, at least for sort of most categories.
And Mike, do you think even though there are increases in their pricing and sourcing and of course replenishment, do you think that there also will be likely just to kind of try to keep prices up as high as possible for as long as possible, just to ensure that they can collect as much margin or continue to build on margins?
Yeah, I think so. I mean, I think a lot of these, CPG companies will think, well, they're sort of owed something because they've gone through this. A lot of them have gone through, several hundred basis points of margin pressure the last 2 years. I mean, it was sort of last year was supposed to be a year of margin recovery. Then the Ukraine war happened. That didn't happen. So they've gone 2 years of just sort of substandard margins, and are thinking, well, now I should get some of this back. And so you think of a product where the price is kind of visible or memorable, like a box of Smucker's Uncrustables, which for a long time was $9.99. I think they raised it to like $11.50. Well, if they cut it to $10.75 or something, and then they had to raise it back again to $11.50 later on, well, it upsets people every time they increase the price. So I think they're going to try to keep that, where it is. Maybe that's a bad example because it's a popular product that is sometimes, sold out. So, but they can do things like that. I think they are going to try to keep them high.
I think the unit cost of making your own PB&J and like cutting it out with a cup is like 68 cents or something like that, depending on the type of peanut butter you use. Smuckers, I'm coming for your business model. But Mike, I think it's fascinating to talk about it like this, especially as Alan mentioned earlier, are we or are we not in a recession? What does consumer behavior look like when companies are trying to suss out what they're keeping and what they're willing to get rid of?
Yeah, I think people are on different tracks. I do think the consumer behavior has really changed a lot in the last few months. Like if you would have asked me that 6 months ago, I would have said that as far as CPGs are concerned, the higher income consumers are just not changing their behavior at all in terms of what they consume, what they buy, and in terms of CPGs, groceries, those type of consumable products. I think that's changed a lot, though, the last few months. Like more higher end, higher income consumers are going to places like Walmart and Costco, and because just sort of everyone has seen price increase in just so many different areas that everyone's looking for ways to cut back. So I kind of feel like everyone is trying to cut back in some way, because everyone has seen their standard of living, go down, even with the tight job market and with the stock market, recovering here quite a bit year to date.
And Mike, of course, you're also our, in-house intermodal and head of intermodal solutions. Are there, real quick before we let you go, any stories that you're going to be watching on the rail side or intermodal side as we get into this new week?
Yeah, lots of things with rail service this year. So we have some upcoming, guests and PSR, People Speaking Rail was a show I do with Joanna Marsh that are really going to dig heavily into the service issues that the shippers are receiving and what they can do when they're receiving substandard service. One of the guests that we have lined up, I don't think we have a date pinned down, but we are going to have Dan Elliott, who is the former chairman of the U.S. Surface Transportation Board, and now he's an attorney in Washington, D.C., who I believe he fights on behalf of shippers, railroad shippers that are receiving bad service or want to improve their service. So I think there's a lot of interesting topics related to that.
Awesome, Mike. CPG, Rail, Intermodal Solutions, thank you so much. The list goes on. We'll be sure to check in with you again throughout the week.
Great. Good to see you, Anthony.
Good to see you as well, Mike. And right now, we're going to toss it over back to our next weather update with Kaylee Nix.
All right, Anthony, thank you for that. Moving back into weather and winter, not quite over. That pesky groundhog last week did see his shadow, which means 6 more weeks of it. The meteorologist could have told you that. But especially for the Rockies, we've got another bout of winter weather headed their way with some heavy snowfall, again, impacting those mountain passes, specifically across northern Utah and then up into the mountains of Colorado. Let's check it out in Sonar Critical Events. Not expecting this to set up to be a major impactful winter storm across most of the country like what we've seen, but this is more just kind of seasonal snow that's going on across the southeastern portions of Idaho, down into the northern parts of Utah along the I-84 corridor, so however. So this could lead again to some hazardous travel along those interstates. We do have winter weather advisories in place across southeastern Idaho and up into the northern parts of Utah. That does include the Salt Lake City metro with those winter weather advisories. And again, for those interstates, I-80 moving through the mountains and then down across the southern parts of Salt Lake City, I-80 to the western half of Utah as well, moving into Nevada, that is. With that, we're expecting total snowfall amounts to be light, but just enough to have an impact, especially in those highest elevations. Same thing as you move up across Wyoming, that 2026 corridor, and then up to I-25, and then of course the mountains of Colorado, expecting some of that snow too. Denver seeing a quick in and out of some of the snow, so overall the roads there won't be too bad, but we are expecting to see more filter in as we move throughout the day today and into the start of tomorrow. Because of that, winter weather advisory is in place once again across the northwestern portions of Colorado. That does just barely include that little portion of I-70 moving through the Glenwood Springs area. Again, chain restrictions still in place across all of these states, so make sure that you know what you're dealing with when you get there. Just always have your chains on hand as well. We'll continue to talk a little bit more about weather coming up in our second hour of FreightWaves Now. Right now, we're going to take a quick break, and we'll be right back.
Welcome back to another edition of Check Call. Check Call. Check Call. Check Call. Let's go. Nobody works for free, so why should we be expecting our drivers to? Okay, let's just get it together now. What are some of those proactive steps that you can start taking now? For myself, I would like the Earth to still be here for a little bit longer, but you know, is a hot dog a sandwich?
Oh, okay. Is pizza an open-faced sandwich? It's bread.
I have been ready for this question. I've seen the show.
We're all in this together.
Thanks for making me hungry. Now I want a hot dog.
You're welcome. Catch episodes of Check Call Tuesdays at 12:30 on FreightWaves TV. Keep up with all things Check Call on freightwaves.com/checkcall. See you on the internet.
What does this have to do with freight? Well, I'm glad you asked. People are wondering what's going to happen with inflation. Is there going to be hyperinflation? When is hyperinflation going to be here? When is there going to be inflation? What's going to happen with inflation? Inflation. This is the sexiest topic within the economy right now.
Welcome back to FreightWaves Now, everyone. I'm Isaiah Buchanan, and this is Social Roundabout, where we take a look at what's trending on social media. Well, the 65th annual Grammys were held last night, and history was made. Beyonce, we all know her as Queen Bee, but now she's also Queen of the Grammys. She had 4 more wins last night, including Best Dance and Electronic Recording and Album, and also Best R&B, Traditional R&B Performance. So that gives her a total of 32 Grammy wins, which is more than any other artist in history. So congratulations to Beyonce. Some of the other big name winners were Harry Styles with Album of the Year, Lizzo had Record of the Year, and Bonnie Wright had Song of the Year. So if you're wondering about the difference between song and record, a song focuses more on the songwriters, and then the record focuses more on the producers of the song. So that's the difference of that. I had to look that up because I didn't know. Switching things up a little bit, the Chinese spy balloon was shot down over the weekend. This is video from Twitter that shows the balloon being shot down. Now, China did say that the balloon was called a civilian unmanned airship. Their Ministry of Foreign Affairs wouldn't give comment when asked what kind of company made the balloon. She did say that the flight path was an accident and that China has lost control of similar vehicles like this before. They are asking for the U.S. to remain calm, for mutual respect, and a peaceful coexistence. So apparently there were also 3 of these during Trump's administration that we're just now finding out about as well. So there's a lot going on with this situation. We'll continue to keep you updated. And last but not least, the question that you've all been wanting the answer to for 25 years has finally come out. James Cameron has announced that Jack could have survived on the door with Rose at the end of Titanic instead of sacrificing himself and laying in the North Atlantic Ocean and passing away sadly. And so James Cameron did say that there would have to be some variables that would have to be looked at for Jack to survive. Both he and Rose would have had to have their upper bodies up out of the water while just having their lower bodies in the water. That way their organs would stay warm enough for them to live until they were found by a lifeboat. And that's all I have for this edition of the Social Roundabout. Right now I'm going to toss things back over to Kaylee and Anthony.
All right, Isaiah, thank you for that. Anthony, I know you're not a movies guy, but are you a music guy?
Big time music.
Okay, so Grammys are your jam?
I don't follow the Grammys too much, but I do have a few artists that I root for.
I just got to say, shout out to my boy Harry Styles for Album of the Year.
I have not listened to that one just yet, but I'll probably add it to the list.
Go listen to Harry's House. You can do that in between breaks of listening to Global Supply Chain Week next week. It's a good little compliment.
It's coming up, and it's not too late to get registered, and it's free of charge. So you can get registered for free, and of course, when you're registered, Kaylee, you'll be eligible for giveaways.
Rumor has it some of those prizes might actually help you listen to some of those Grammy-winning award artists from last night. AirPods Max, you've got an iPod mini speaker, you've got an Apple TV, you can stream their YouTube. Hey, there's a big green egg that you could listen to music while you're grilling out this summer. I don't know what you do with your big green egg. Have fun with it. I don't know. But head on over to live.freightwaves.com to get registered for Global Supply Chain Week. I've got a really good keynote headlining Food and Beverage Day, the third day of the week, so definitely check that out. You can go get registered right now, as we're going to take a quick break right after this market update.
to an event like F3, we know what they want is a chance to show off their products, their swag, and make new partnerships that will last until our next FreightWaves event.
But the problem is there are so many industry events, it can be so hard to find the right one to invest your time and energy in. We at FreightWaves take your investment seriously.
Which is why we've brought together thousands of industry professionals in one city over 3 days to showcase all you have to offer.
Because your successful connections at an event like F3 move all of us forward.
Don't believe us?
Join us in June.
It's a good day coming.
And welcome back to FreightWaves Now. Starting off your next hour with a check of your top stories this morning on FreightWaves.com. FedEx Freight has enacted another round of temporary driver furloughs in some United States markets, but did not release the number of furloughed drivers or say how long they can expect to be out of work. Some employees were offered permanent transfer opportunities to markets that have hiring needs, according to a statement from the company. Drivers will retain health benefits and other financial incentives during the time of their furlough, and FedEx will bring back drivers as its business circumstances allow. LTL carrier Saia delivered a mixed bag of earnings with a higher yield for fourth quarter 2022, but with a weaker operating ratio and lower tonnage. Tonnage dropped 7.65% for the quarter and shipments dropped 8.16%. However, yield improved to $20.11 net of fuel for the quarter, up 6.46% year over year. Operating ratio hit 85.9%, up from 84.2% last year, and analysts use this number to question whether or not the company can hit their goals of operating ratios in the 70s. Amazon had another whirlwind week, capping it off with a potential antitrust lawsuit from the Federal Trade Commission. The Wall Street Journal reported that the FTC has yet to meet individually with Amazon to argue the legal challenges around the company's alleged anti-competitive practices. One of those claims is that the web marketplace favors its own products over third-party sellers on the platform. The FTC is also reportedly looking into Amazon's practices around Prime subscription bundles. Truckload carrier Heartland Express reported only a slight increase in operating income for the fourth quarter, despite making acquisitions that doubled the size of the company. Consolidated revenue increased 140%, with operating income moving just 2% higher. The company missed earnings expectations on Friday, reporting earnings per share of 20 cents, down 29 cents from estimates and 6 cents lower year over year. Gains on sale were down by $6 million year over year, which resulted in a 6-cent headwind. And FedEx has ended its same-day delivery service in the FedEx office unit after a decade of running the program. A FedEx spokesman said that the company decided to prioritize several other opportunities for growth instead of continuing on with the program. Same-day City served more than 30 U.S. markets, and the company did not disclose how much this will impact them financially. FedEx Express and FedEx Ground will continue to provide a range of same-day delivery services instead. And for those headlines and so much more, head on over to FreightWaves.com. If you're watching us on YouTube, don't forget to like and subscribe, and of course, give us a follow on social media as well. Get the FreightWaves app while you can, or head on over to tv.freightwaves.com for anything you might have missed from last week. Right now, we're going to toss things back over to Tony and Donnie for our next carrier update.
Welcome into this carrier update. Donnie, going to start here looking at reefer lead times. Saw an increase there to in January. Not really surprised when you factor in into the month, but then you also had that winter storm that you talked about that ranged. Shippers did come under a little pressure.
So here we look at, roughly, if we look at previous, that 4.4 to 4.2 range is about the normal.
Yep.
And here we see it up to 4.8. It's come down to 4.44. So currently, shippers are under a little bit of pressure.
Yeah.
Now, the reefer carriers may not realize this. And you can kind of see that with the rates that have been going on. Rates have been consistent, just like in dry van and every lane, just consistently going down, down, down. But they are and they have been under some pressure. And this is the time period, if you can't see this, that you need to understand. These are the times that you have the opportunities to try to put upward pressure on rates.
Yeah.
And now if one company does it and the other 30 companies don't do it, it's not going to work.
Yeah.
Everybody needs to equally have pressure, upward pressure on these rates. And now might be a time that you can do it. Again, that storm just went through. Some of the freight backed up. Those lanes were closed. Some people need to move that stuff now. There will be a little bit of critical, not a lot, not as probably as much as when it happened back a few years ago, but now's the time that they have the opportunity.
Yep.
So carriers, reefer carriers, push your rates up, get your spot rates pushed up. It'll be short-lived.
Yep.
All right, now let's see what's going on. We'll look at first, these are outbound rejection rates in a 3D map here with volumes behind it. And again, we got a little poultry belt here that's always the darkest blue. These are the hottest spots pretty much in reefer to run in and out of. We got Indianapolis sticking up over here and Houston on the West Coast out here, Twin Falls, and a little bit of a blue there in Southern California.
That was the one I was going to talk about.
Well, now, this is just the regular rejection rates.
Yeah.
Let's flip over to the next chart here and see the change from the previous week. And now we still see Southern California on here a little bit, which is kind of interesting. Again, here up in Minnesota and Nebraska, we see rates that have pushed up just a little bit. Rejection rates have increased just a little bit from last week to this week. Dallas, Fort Worth, Atlanta, a little bit of a pickup here. South Carolina, we'll look at Greenville here today on our lanes today. And the Charlotte market, we won't look at Charlotte for lanes today, but Greenville for lanes today, but Charlotte market has increased. So we see some markets are moving, and that's what's really important to understand. Look at this every day, because just because rejection rates continue to go down or maybe they stay steady, it doesn't mean that nothing's happening.
Yep.
Some markets are going up, some markets have turned red and are deteriorating.
Yeah, and I think what's interesting, I mean, you're kind of moving out of apple season up there in your eastern part of Washington and Oregon. And it's still early for what you call produce, but I mean, you are seeing Southern California kind of pick up a little steam. I mean, you have Atlanta, obviously a lot of things, produce, anything that's coming up from like South America and the like, and goes up into, say, Miami or into Savannah is ending up in Atlanta to go out elsewhere. And you're seeing capacity tighten there in Atlanta.
So, there's always produce there in Southern California. The peak is the summertime. But you are right. As we get on into February, you're going to see a lot more start hitting into Miami. As you say, probably get moved up to the biggest distribution point of the Southeast to the nation, and continue to watch, especially if you're a reefer. And obviously, where all the loads are in the middle of the country as well.
Absolutely, Donnie. Thank you so much for this update. We'll be sure to check in with you again a little later. Right now, we'll hand it back over to Kaylee and Anthony.
Righty, guys, we'll get one more carrier update before we're done here for the day. Right now, we're going to welcome in Marilyn Surber, who is, of course, joining us from Tenstreet, talking all about driving recruiting and retention, if I can speak this morning. Marilyn, thank you for joining us.
Yeah.
So let's go ahead and talk about, I think, a pretty interesting topic this morning is drivers and where they can position themselves to be in a really good spot when the economy eventually starts to turn around. Because, of course, it's cyclical. It's going to come back. What do you think is the number one spot for drivers to be in when things eventually find that upswing?
One of the things I think is important for our market and people who maybe haven't experienced any of the cycles in our market is that it is definitely going to come back. So if that's this month, next quarter, it's definitely coming back, and it usually comes back with a vengeance. And so I think the best thing for drivers to do to be positioning themselves for when it comes back is also to the first things first, I think, is to take a deep breath and think about where they are and think about before things maybe started to slow down, were they really happy? Are they happy otherwise, right? Besides the fact that maybe they're getting a little bit less miles than they were. And if they are, I would say stay where you are and wait for it to come back. Because if you're not getting miles there, you're likely not going to get miles at a different carrier either, right? And it could be less, especially in a transition. And so I think one of the things to tell drivers is if you're happy otherwise, just stay put. And you can also be preparing yourself for maybe something better in the when the market does come back. So take advantage of your time if you're not running as much, when you have downtime, do extra training, maybe look and see, do you have certifications? Do you have your TWIC card? Are you hazmat certified? Are there other things that might make you more valuable on the market when it does come back?
And Marilyn, do you have any words of advice for those that maybe exited the industry throughout the last few quarters here, and maybe they got into construction, manufacturing, or maybe they're warehousing or something in e-commerce, anything? Do you have any advice for them as maybe they're eyeing to get back into the industry on really how to time all that or approach it?
Yeah, I think that's a great question because trucking, we're still hiring drivers, right? Most carriers are still hiring drivers. A lot of carriers are hiring drivers. And so I think if you exited the market and you're thinking, oh, is trucking recession proof? Should I go ahead and come back to trucking? I would say, come on, right? I mean, there's plenty of carriers that are hiring drivers right now. So if you're interested in coming back into this industry, I would say get started, go online to fill out an application, go on driver polls. And again, take advantage of those same things. Is your training current? Have you taken advantage of opportunities to do training? Do you have the certifications that you might need? Are you registered with the clearinghouse, depending on maybe how long you've been out of the market? Have you done these things? So I would say, come on, don't wait if you want to come back.
So for some of those drivers, continuing on this thread, maybe you've exited and you are in a different spot right now, and maybe some of your certifications have lapsed, or you want to try and maybe kind of like get back in the swing of things. What type of opportunities exist for them to quickly go someplace and figure this out? Like, are you looking at maybe taking a driver refresher course? Do you go back to your state and re-up your CDL? What does that process look like?
So a couple of things. So depending on how long they've been out of the market. And so most carriers are going to require usually, 6 months to 12 months in the last 3 years to be considered an experienced driver. And so if you don't have those qualifications, if you've been out of the market that long, then you might absolutely be looking at going back and taking a refresher course. And so you can go to cvta.org or napftds.org, and that is going to give you a directory of truck driving schools, both public and private, all throughout the nation. But if you haven't been out that long and you just really need to update your skills, if you have the Driver Pulse app, you can go onto Driver Pulse, and there's all different types of training there, including the new hazmat. So the hazmat regulation did change with entry-level driver training last year. And so if you don't have a hazmat and you're interested in getting a hazmat, you have to go through that entry-level driver training, or if you've let that lapse for some reason, and you can also find that there. And so I think go online and do some research, go onto Driver Pulse, go to CVTA's website, NAFTA's website, and kind of look at what you want to do. And if you have a carrier in mind, call that specific carrier or call a host of carriers that you are maybe interested in and ask them what they need you to do. I think that carriers welcome those questions, and they love it if a driver is trying to prepare themselves for their job.
So on that entry-level thread right now, maybe if you are looking to get into the industry for the first time, say maybe you're sitting currently in a construction or manufacturing job and you're good where you're at, but you want something to keep in your back pocket just in case. Is it possible, and is it maybe a good thing to do to go through some of these initial courses, maybe take that driver training program just to have it in case, like as a backup plan?
Well, you can take some theory courses to get your permit. And so that would better position you if you decided you wanted to go to truck driving school, you would already have your permit, which usually is going to make your experience at truck driving school a little bit quicker. And there's also a lot of funding available to go to truck driving school depending on where you are. And so I think absolutely it's a great complement because there are also other jobs in construction, in warehouse, in utilities, and diesel mechanics. There's all types of jobs like that that sometimes require a CDL, or it's definitely going to put you in the position to have a better job at that company if you also have a CDL in addition to another skill.
And Marilyn, almost on that same note there, any words of advice for those that maybe we're almost getting to that time of the year where folks are going to start graduating from high school, things like that. Not quite old enough, of course, to be a driver just yet when you're looking at state to state, but any words of advice for those that maybe are eyeing the industry and they really don't have any kind of work experience just yet?
Yeah, so I think that the warehousing jobs, also mechanics, diesel mechanics, you can go to school as a diesel mechanic right out of high school or sometimes concurrently while you're in high school. And so, and trucking companies need diesel mechanics as much as they need drivers. That is also a highly in-demand occupation. There's funding to go to school to be a diesel mechanic, and it can also start you on a career path so that you can start out in the industry. You can start to learn, knowing how to take care of your own truck when you do go on the road as a driver is only going to help you. And so that can really be a nice stepping stone into a long career in trucking.
And so for drivers who are looking to position themselves in maybe a visible place or make sure that they're set up for success as they're looking to maybe re-enter the industry, should they be looking at job boards? Should they be reaching out to those carriers individually, trying to maybe set themselves up for success on LinkedIn, networking? What do you think is the best kind of approach for them?
So I think, LinkedIn is a great to make sure you're out there, that you've got your stuff out there. Also Driver Pulse. If you have that app, make sure that all of your information is up to date in there, because you can go there and you can apply to a lot of different companies from one place. And so I think going on LinkedIn and researching other companies and going on some job boards and doing some research there to see what companies are offering. But then I would say, yes, call that specific company, because what we are seeing in the market is, drivers are being more and more particular about the companies that they're applying for, which is good. I think it's a good sign of drivers kind of being more educated and doing all of those things with jobs. And so I think go online, do your research, make sure you're visible on LinkedIn, and then call the carrier and get a feel for them and ask them the specific questions and what they are looking for and what they need from you specifically.
And of course, Marilyn, thank you for giving out so many different resources. But if people want to find out more about Tenstreet, what it is you all do there, or get in contact with you, how can they do that?
Yes, they can go to tenstreet.com. They can also go on LinkedIn. They can find me on LinkedIn, or they can just email me, marilyn.surber@tenstreet.com. And all of those ways, we would love to hear from you.
Awesome. And in closing thoughts here, Marilyn, what is going to be one significant trend or maybe, potential, I would say, data point or anything like that you're going to be watching closely just to really kind of be able to say, hey, we're seeing a shift in the market right now?
So we watch driver applications, and so we have a really good pulse on that. And so we're already starting to see those applications slow down from where they were at their height at the end of the year and in January, where there was a lot of movement. We're already seeing that come down. And so that is a welcome sign for the market. I mean, it does mean that recruiting is tightening, but that also usually means other good things. And so we're going to continue to watch that to see, is that just a fluke for the last couple of weeks, or is that activity going to stabilize? And we're going to be watching that for sure.
Definitely will be watching that one as well. Marilyn, thanks so much for joining us this morning. We'll check in with you again.
Thank you.
Right now, we're going to head back over to the wall because we have Kaylee next with a weather update.
All right, right, Anthony, thank you for that. Our next look at the weather, focusing back in on the southern plains, central Texas to Oklahoma, where last week they were inundated with moisture, but with such cold air that it was an ice storm. This week you're looking at more moisture heading into the area, but temperatures warm enough to keep it all liquid. We're going to be looking at some pretty heavy rainfall for northeastern Texas as well as southeastern Oklahoma, moving up into central Arkansas and southern Missouri. Let's check it out in Sonar Critical Events right now. We've got our forecast precipitation up on the map. This is going to be day 1 through 3, so today through your Wednesday. Axis of heaviest rainfall going to be centered just to the east of Dallas from that I-35 corridor up from Waco into the Dallas metro, up across northeastern Texas into Hill Country, and then up across central and east central Oklahoma, all the way along the I-40 corridor from Oklahoma City out towards the Fort Smith, Arkansas area, and then up from Tulsa up I-44 towards southwestern Missouri. Heaviest rainfall here going to be about 2.5 to 3 inches in some spots, and all of this going to be falling is liquid. They don't have to worry about any impacts from an ice storm situation like what we saw last week. But good news is we got more moisture moving on into the area, filling up some of those reservoirs and streams. And of course, we do have all of this running off eventually into the Mississippi River Basin. So still, good news is we really start to build up those reservoirs moving into your spring. With this, not expecting any major travel impacts or any type of like flooding rainfall from this. Just gonna be kind of a steady rain through starting off tonight and then lasting all the way through your Wednesday morning. Just take it slow on the roadways, your normal wet weather precautions as always. Some spots can see some ponding on some of those interstates, so just be careful out there as you typically would for this time of year and driving in the rain. We'll get one more look at the weather before we're done here for the day. Right now, we're gonna take a quick break. We'll be back with Grace Sharkey. The 2023 Freight Tech 25 list is filled with meaningful innovators from across the industry who are helping shape what the future of supply chain will look like. Check out the full list of these companies and all the latest Freight Tech news at FreightWaves.com.
What does this have to do with freight? Well, I'm glad you asked. People are wondering what's going to happen with inflation. Is there going to be hyperinflation? When is hyperinflation going to be here? When is there going to be inflation? What's going to happen with inflation? Inflation.
This is the sexiest topic within the economy right now.
Welcome to Drilling Deep. I'm your host, John Kingston. Drilling Deep is the place where we talk about oil and we talk about diesel, and you have to drill to get oil and you have to get oil to make diesel, so that's why we call it Drilling Deep. Drilling Deep drops every Friday on FreightWaves TV and all available podcast platforms.
Welcome back to FreightWaves Now this morning, and it is Monday, which means that it is time to check in on your SiriusXM radio update for the week. Grace Sharkey is back in business, and she is here with us today. Home from Manifest, hopefully a little bit relaxed after your crazy Vegas week.
The voice is coming back, so that's really fun too. But yeah, happy to be back and happy to get back into the swing of things as well.
That's good. A voice is definitely something that you need to be on SiriusXM. You've got a good slate of guests lined up for the week. Grace, tell us a little bit about who you're talking to this week.
Well, I will say this week's going to be fun, and the rest of the month as well, because it is Black History Month. So I'm doing my best to fill as many spots as possible with Black leaders in our space. So why not start off this week with Adam Wingfield from Innovative Logistics. He actually just interviewed Damon John, which if you guys are Shark Tank fans, you know who that is. And so we're going to have a really interesting conversation about a couple of the topics that he touched on in that interview, and of course, other leaders in the space that he is influenced by as well. We also have Priyanka Ann Saini, who was on Great Quarter Gals with us a couple weeks ago. She was at Manifest as well, so I want to break down with her different technologies, different companies that she saw fascinating. Actually, Priyanka's always usually headquartered in India, and we got her the last day that she's here in the U.S., so figured why not grab her for a quick radio spot as well. Tuesday, Thomas, of course, is going to be with me, and Blythe Brumleve is going to be on as well. Blythe is going to be on every Tuesday throughout the first Tuesday of every month. So it's her time to shine with us. We're going to be talking marketing and trends that, of course, we did see at the conference, but of course, different things she's working on too. On Wednesday, Mary O'Connell will be with me. I'll also likely have a freight tech company with me who will be making some announcements. So we'll keep that wrapped up for now. Mike Baudendistel will be joining me as he always does on Thursdays to talk about different CPG trends. And he hasn't been on for a couple weeks too, so we had a lot to catch up on. And then Ramel Watley, who actually runs the Truck and Hustle podcast, will be joining me. I actually got to see him interview quite a few leaders while we're at the press room at Manifest as well. He's a really great interviewer, and his platform is huge. I think he has over 90,000 followers or subscribers on YouTube at this point. So that should be a really great conversation as well. And then wrapping up Friday, every Friday now moving forward, Michael Rudolph from our Sonar team, our market experts, will be joining me as we break down the power pricing index here from FreightWaves and talk about what we expect to see for the week ahead. So some fun people lined up for sure. And for anyone out there who has any African American or Black leaders out there that they think should be on the show as well or have an interesting story, let me know, because I want to spend some time this month to, of course, highlight that group and spread some of that awareness too.
Definitely an awesome way to kick off February, Grace. Any particular topics that you're looking at throughout the week in any of these conversations?
Yeah, a big one, especially because we have two great leaders in the trucking space, is how trucking companies in particular are making sure they get through some of these market swings out the other side unscathed. And in particular, I think one thing I really want to focus on is a lot of these minority-led contracts that are out there as well. I had a number of really great discussions with actually a few trucking leaders at Manifest. It wasn't just technology companies as well. And there's a lot of opportunities for equity to be spread in this industry. They're a little bit difficult to find. So I want to kind of show a spotlight to that. So if any listeners are out there looking for some more of that contract freight that, companies out there with their ESG initiatives at some point are actually forced to give out contract-wise, and I want to make sure that those opportunities are made a little bit more visible for them. So that's one thing that I'm hoping on touching a little bit more.
Awesome, Grace. Well, we love that. We'll catch you every single night this week on Road Dog Radio. That's channel 146 on SiriusXM. Drive time is from 5 to 7 Eastern, and then replays from 11 p.m. to 1 in the morning for you late night owls. Thanks for being here today. We'll talk to you tomorrow for Great Quarter Gals at 3 o'clock.
See you later, guys.
Hey everybody, this is Thomas Watson, enterprise trucking carrier expert here at FreightWaves, telling you about my show, Loaded and Rolling. Now, it involves trucking topics for large carriers and even small ones that wish to be large. Anything that impacts trucking, you can get it there. You can catch us every Tuesday at 1 p.m. Eastern on tv.freightwaves.com. We do it live.
When guests come to an event like F3, we know what they want is a chance to show off their products, their swag, and make new partnerships that will last until our next FreightWaves event.
But the problem is there are so many industry events, it can be so hard to find the right one to invest your time and energy in. We at FreightWaves take your investment seriously.
Which is why we've brought together thousands of industry professionals in one city over 3 days to showcase all you have to offer.
Because your successful connections at an event like F3 move all of us forward.
Don't believe us?
Join us in June.
It's a good day coming.
Welcome back to FreightWaves Now. On this Monday, it's time for your final check of weather here for your Monday morning. We're looking at a pretty nice warm-up across the majority of the southern for this week after that bitter cold that we saw last week. So let's check it out in Sonar Critical Events. We've got our forecast maximum surface temperatures for across the next 24 hours. So this is through today and into tonight. Looking at temperatures reaching up into the mid-70s, some 80s possible across the coastline. But the majority of the country from southern New Mexico, across Texas, Oklahoma, down into the deep south, looking at settling well above their seasonal averages with temperatures up into the mid-60s, some 70s, some places as well. It's going to be super nice even up into the Great Lakes region and up into the northern parts of New York State. Some places up here in the New England saw bitterly cold temperatures that were record-setting for some of the coldest wind chills ever recorded on Earth over the weekend. Mount Washington up in Vermont saw a wind chill temperature of -106. That's colder than Mars was last weekend. So put that in perspective. They're going to be warming up again back above their seasonal averages up into the mid-50s as well across the lower elevations there. Mountains going to be staying in the mid-30s there, but much better than -100 something for wind chill. Other than that, we're looking at a pretty quiet week across the country besides that rainfall impacting the area that I mentioned, of course, from Texas through Oklahoma. And looking at a calm start to your week, but possibly picking up a little bit more with some rainfall wider spread by the time that the weekend hits. Warm weather not going to last too long. Our next cold blast is well on the way, but until then, enjoy these first few days of the week with more spring-like temperatures. That does it for your weather today. We're going to toss things back over to Isaiah for a final check of the social roundabout.
Welcome into Social Roundabout, everyone. I'm Isaiah Buchanan. And the 65th Annual Grammys took place last night, and history was made at that awards show. Beyonce won 4 different awards, which now gives her a grand total of 32, making her the artist with the most Grammys in history. So I just want to give a shout out to Beyonce for that. Some of the other big winners from the night included Harry Styles. He won Album of the Year. Lizzo won Record of the Year, and Bonnie Wright won Song of the Year. So congratulations to all of last night's winners. Now, switching things up just a little bit, we're going to be talking about the spy balloon that was shot down over the weekend. Now, China said that it was a civilian unarmed manship. Their Ministry of Foreign Affairs wouldn't give a comment when he was asked about what kind of company made this balloon. She did say that the flight path was an accident and that they lost control of it. They apparently have lost several similar vehicles over the days. So Not really sure what that's about, but they are urging the U.S. to remain calm, keep a mutual respect, and a peaceful coexistence with China. So that is an update on that, on the spy balloon that was shot down over the weekend. We'll continue to keep you updated. And last but not least, the question you've all been wanting answered: could Jack have survived on that door with Rose at the end of Titanic? And the director, James Cameron, says yes, he could, depending on some of the variables. If Jack and Rose were both able to have their upper bodies up out of the water and just have their legs in the water, they would have been able to survive. They believe that would have kept their internal organs warm enough to survive until a lifeboat would have gotten there to rescue them. So there it is, folks, the question you've all wanted an answer to. That's all I have for this edition of the Social Roundabout. Right now, we're going to toss things over to Bill Priestley with our roundtable.
And welcome to the roundtable. Bill Priestley here with you. And shouting in Washington is nothing new. It goes back all the way back to the founding of the country. But a little bit more shouting this past weekend on Wednesday as the House Transportation and Infrastructure Committee got together, and a little bit of an interesting conversation back and forth. We got two gentlemen that can provide some interesting insight into this as well. Lauren Smith, president of Skyline Policy Risk Group, joins us, as well as Randy Mellett, senior advisor at Imaginovate. And gentlemen, it seems like you all are becoming regulars here on the show. Thanks for joining us there as well. The Infrastructure Investment and Jobs Act was of particular concern at this meeting on Wednesday, where a lot of perspective was lent, let's say, to the situation. Lauren, let me start with you. If you're in freight right now, in terms of how much is being said as opposed to how much is being done, are you more or less optimistic about the way things are going now that we have a split Congress, but also the fact that the Republicans now control committees in the House?
Well, I think a couple of the key things, Bill, are that freight infrastructure and spending of the IIJA money on freight, key freight corridors, freight nodes, that's the key priority. And so from the freight industry's perspective, it's not even so much a question of are you happy or sad, it's just you've got to keep that pressure on. And so you have to keep agitating for, the administration to spend, more and more of the money, to get a larger share of the piece for freight infrastructure. As far as, having Republicans in Congress goes, I think there's also a focus on regulatory issues there, where the freight industry probably looks at the Republicans as being sort of their protection on the regulatory side, like put pressure on making sure that freight efficiency is the highest regulatory priority, or certainly at the table as one of the highest priorities. So on that regulatory and infrastructure spend side, I think that's probably their key priority. I think that's what they were putting pressure on.
Randy, as you look at that situation, what are you seeing in terms of, is the freight industry going to have to, as Lauren said, apply that much pressure and to make sure they get the money they need in the areas they want it?
Yeah, I think Lauren's exactly right. This is one of those situations where you've got a serious change, a really significant change in how money's doled out. A lot of it now is grant processes, a lot of different ways to collect that money. More of it's coming from general funds rather than the highway trust funds. So anytime you get this notion where the agencies are expected to interpret the will of Congress, it really, really is incumbent on the affected parties to stay really involved in that process to make sure that it does not go awry somehow.
Gotcha. Let me stay with you for the next question. We'll flip-flop back and forth here. Obviously, Speaker McCarthy, and this is more or less a 50,000-foot question, but Speaker McCarthy a little bit tenuous in terms of obviously the war that he had to fight and the concessions he had to make in order to become Speaker. Does that change anything as terms of how well this Congress will act in terms of what the freight industry may get? And again, that could be anybody in any industry. But does that make things a lot more difficult at this point in terms of how unstable, that may not be the greatest word, that the House is at this point?
There will be certain areas that of course becomes important, but infrastructure is one of those things that traditionally has been more bipartisan than most other things in Congress. some of the biggest ports in the country, for instance, are in areas that are heavily dominated by Democrat politics and are represented by Democrats. They want to make sure that they're getting the best deals and the best funding that they can for those areas too. We're also just coming off of the infrastructure crisis that was took place over COVID. So this is really front of mind for everybody in Congress right now. So in this particular area, I don't see that McCarthy or the Republicans' thin margins really make all that much difference, at least right now.
Lauren, same question to you.
Yeah, I think that this is probably a more of a unifying issue for the Republicans to sort of grumble gently, like, the administration, they need to be focusing more on freight. They should be doing more. That's sort of an easy unifying theme for Republicans to have. But I think as we get into actual legislation, I think it's going to be a little bit more challenging. But in general, I think infrastructure this year, probably the key things that the transportation committees will be working on include the FAA reauthorization. That may get a little bit more interesting as you see some of the flashpoints there. But as far as infrastructure oversight, it's more a question of just sort of like exerting that pressure on the administration to, spend the money on freight, key freight arteries, the connecting points, the multimodal nodes of the freight network, and then on regulation, making sure that the administration, whatever the regulatory priorities are on labor, safety, health, the environment, also take into account the efficiency of the freight network.
Gotcha there. If you want to go back and look at the article that we have on FreightWaves.com, we have it, just a quick picture of it here. This is the one that we're talking about and referencing that John Gallagher wrote. Randy, back to you here. Will there be legislation, do you think, that comes out of this Congress that will lower the cost of trucking? We saw a lot of things come through that have elevated that. A lot of the comments that were made during that session on Wednesday said, look, the price of trucking is going up, which means it's a pass-through. Americans are going to pay more. Inflation is running rampant in that area, and that's why costs are up across the board. Do you think we'll see legislation that will lower the cost of trucking, which hopefully lowers the cost of goods for Americans?
There are a couple pieces of legislation out there that would lower the cost of trucking around the edges, I would say. They address new equipment and perhaps some rebates on that. There's discussion around getting rid of the excise tax. There is a discussion of lowering the age limit or expanding that program to make it easier to hire drivers. All those bump up against other things, though, like labor, like safety. And so again, I don't see a panacea, but I also don't see anything that's going to really significantly raise the cost of trucking, which is also just as likely to happen in Washington, D.C.
Yeah. Lauren, same question to you. Let me back up a little bit and just ask, is there anything at all that could possibly lower the cost of trucking? Could they do anything if it's, as Randy said, only a fringe kind of an issue?
Well, again, the work that the federal government is doing on the freight network itself overall is probably the most important and applicable area where they'll do that. Could Congress change the rules with legislation, as you mentioned, the excise tax or some of the other areas with respect to labor or localization? Unfortunately, there probably won't be any significant changes that will help the economics of trucking. But I thought that last comment by Randy was really good. Probably we won't see anything to significantly increase the cost of trucking on the other side, but I probably not a lot of movement. Again, the major issue this year is going to be the debt ceiling that Congress has to figure out some way to raise. I think there was some encouraging movement last week with Kevin McCarthy meeting face-to-face with President Biden to sort of open negotiations on how they can take a look at that. And that, I think, will probably result in some sort of major legislative agreement over the summer, which probably will have some spending reforms, maybe some spending cuts, and maybe if they're a little bit more creative about it, they can figure out some policy changes that might be desired by some of the key stakeholder industries. And so certainly that's going to be a risk point, with a positive and a negative risk point for things that might happen. So we'll be watching that very closely as that comes up over the summer, but probably not anything particular on lowering trucking, the costs of trucking until maybe the next infrastructure bill.
We've got about a minute left here, Lauren. Kind of quickly here, and kind of more of a 50,000-foot question. Given this Congress, given the state that it's in, given McCarthy's tenuous position, what are your expectations for this Congress in terms of what they're going to be putting out this year? Is this going to be business as usual, or do you think it may be more of a stalemate, or is there going to be more and more negotiations going on?
I think that they're going to have a result on the debt ceiling, which is going to be like by the end of the year, we'll say, that actually wasn't so bad. And then the FAA reauthorization, I think, is probably going to happen by the end of this year, or possibly the beginning of next year. And there's also a farm bill coming up too, very important for agriculture and transportation related agriculture that I think is going to be probably done again over the next 12 months. So I think it's going to be relatively productive. I actually am. I'm kind of optimistic after the crazy things we've seen over the past few months.
Interesting. Randy, I give you the last word here. You got about 25 seconds.
Well, I think Lauren has hit the high points, though I would add that I think that the Republican House will pass largely on a party line basis all the appropriations bills on the heels of the debt ceiling fight.
All right, this is going to be an interesting term, to say the least. Lauren Smith, Randy Miller, thanks so much for joining us.
Our pleasure. Thank you.
Absolutely. We'll take a short break. Be back right after this.
The 2023 Freight Tech 25 list is filled with meaningful innovators from across the industry who are helping shape what the future of supply chain will look like. Check out the full list of these companies and all the latest Freight Tech news at FreightWaves.com.
Welcome to Drilling Deep. I'm your host, John Kingston. Drilling Deep is the place where we talk about oil and we talk about diesel, and you have to drill to get oil and you have to get oil to make diesel, so that's why we call it Drilling Deep. Drilling Deep drops every Friday on FreightWaves TV and all available podcast platforms.
And welcome back to FreightWaves Now. It's time for one final check of your headlines this morning before we get out of here. Truckload carrier Heartland Express reported only a slight increase in operating income for the fourth quarter, despite making acquisitions that doubled the size of the company. Consolidated revenue increased 140%, with operating income moving 2% higher. The company missed earnings expectations on Friday, reporting earnings per share of 20 cents, down 29 cents from estimates and 6 cents lower year over year. Gains on sale were down by $6 million year over year, which resulted in a 6-cent headwind. FedEx has ended its same-day city delivery service in its FedEx office unit after a decade of running the program. A FedEx spokesman said that the company decided to prioritize several other opportunities for growth instead of continuing on with the program. The same-day city served more than 30 U.S. markets, and the company did not disclose how much this will impact them financially. FedEx Express and FedEx Ground will continue to provide a range of same-day delivery services instead. And ArcBest fell short of analyst expectations for the fourth quarter thanks to the declining LTL market. Earnings per share hit $2.45, 8 cents lower than estimates and 34 cents lower year over year. The number excluded several acquisition-related costs, including a change in fair value to a deal earnout and from expenses from a freight handling pilot. The asset-based segment reported a 4% yearly revenue increase, with tonnage down 6%. ArcBest saw contract renewals and deferred pricing agreements increase by 5.4% during the quarter as well. And you can find those headlines and continued earnings coverage from the rest of the fourth quarter up on FreightWaves.com and our FreightWaves app. And head on over to tv.freightwaves.com for everything you might miss during this week. We're going to toss it back over to Tony and Donnie. They've got our final carrier update of the morning.
Welcome into this final carrier update of the morning. It's our lanes of the day. And Donnie, we got to make sure, we talked about the Midwest. That's an area that's been really hot for the reefer market. One market in particular that's been hot overall has been Chicago, but maybe it's cooled off just a little, at least the way rates have headed.
Well, yeah, so it's been declining, but the reason I brought this up was really because we saw Minneapolis on the change map, the 1-week change map for reefer rejection rates. Well, you just don't go to Minneapolis. And a lot of times you'll find those loads that'll run between Chicago and Minneapolis. So this is a more likely of a lane that could get you out to Minneapolis. Yes, there's a lot of freight that goes to Minneapolis from all over the U.S. But for the most part, I see a lot of them that come out of that Chicago area because it's a hub. So I went ahead and just chose that one so that we can see Chicago to Minneapolis, 410 miles. Range, low 306, high 326. Confidence score of 4, so a fairly stable lane, or stable data coming in on this lane. But we've seen it dropping down over $3.79 a mile just after the first year. It's now dropped down to $3.13, headed out of Chicago. But hey, it's still over $3 a mile, and and you're coming out of one of the biggest cities in the Midwest there. Now, hit my little double arrows and swap this around. How's Minneapolis coming back? $3.63 a mile. This used to be a $600 truck. $550, $600, maybe $650. Easy lane to cover, gets you back into Chicago, one of the hottest markets. Well, there's been some weather issues, there's been some other issues running through here, and Minneapolis has tightened up. Rates just ticked back up just a little bit at this 363, and we just saw rejection rates start to pick back up. So keep an eye on Minneapolis. This might be a lane where you maybe accept some contracted freight out to Minneapolis right now, and then bring the truck back into Chicago at 363. Maybe up to $375, because I'd be pushing these rates up right now.
Yeah, I mean, you're talking almost $1,500. I mean, you were talking about $500. I mean, you're talking 3 times what it used to be. I mean, this looks pretty favorable, even though it's come off its peaks.
Exactly, still good. And you're going to see this trend right here on every lane that we bring up.
Yeah.
And probably every lane that you run right now, because rates have come down. Now, let's jump over here. Next lane here. Keep that reefer turned on. Atlanta, Georgia to Greenville, South Carolina. We looked at Greenville a little bit. Now, this looks interesting, 891. But it's also a very short lane.
Yeah.
But you keep that $149 in miles in mind, because yes, a pretty penny rolling out right now, but if we hit our double arrows and turn this back around, it's only about $4 a mile coming back, but still $4 a mile at that right there. You're getting back to the major metro. That's about right. You know, 5, 6, I'm talking about, you know, those $600, $700, $800 trucks for these short runs that are 150 miles. So not a bad run. And you can see right here out of Greenville, this rate's been slightly picking up just a bit. So we found that looking at our data on our change in roof rejection rates. Keep those maps pulled up. Very quick, very easy to use, and it can point out where some of the markets are heating up with or warming up a little bit with.
Absolutely, Donnie. Thank you so much for this update. We'll be sure to check in with you again tomorrow. Right now, we'll hand it back over to Kaylee and Anthony.
All right, guys, thank you for that. We're done here for your Monday morning on FreightWaves Now, but still plenty more to come for the rest of your day. It's Monday, so we've got a packed schedule.
That's right. Dooner is going to be here with What the Truck in just about an hour. We also have another edition of Fuller Speed Ahead. That's going to be up today, and you heard from him today, Mike Baudendistel. Is going to have another episode of The Stock Out.
We've got about just an hour between now and What the Truck. Plenty of time to head on over to live.freightwaves.com and get registered for Global Supply Chain Week. Coming to you in 2 short weeks here on FreightWaves TV. 5 full days of incredible content touching every single piece of the supply chain. Free to enter. You don't want to miss it. Head on over to live.freightwaves.com to get registered.
We'll see you tomorrow at 9 with more FreightWaves Now.
Is the #1 source for transportation and logistics news. FreightWaves.com provides you with in-depth news coverage, data, and insights from the leading industry journals.